If you a veteran, tired of denied service connection, the VSO ain't really helping. Call A-1 VA ratings with proficiency.
Hey everybody, and welcome back to the A-1 VA Ratings Show. Today we have Mr. Jacob Salazar, United States Navy veteran.
Thank you.
Thank you so much for taking your time out of your day to come and join us.
For sure.
I know when we talked earlier this week, you said you had to go to church with your family, and how's that anyways?
Church is amazing. Yeah, it's, since Holy Week was actually a few weeks ago, it's actually been amazing, man.
Okay.
It's a big part of our family. It's a big part of why I'm successful in what I do and what I like to talk to people about. So, yeah, it's been amazing.
Well, that's great. And since you were here, I did learn that you do love basketball.
Yes.
And today I'm going to be gifting you autographed DeMar DeRozan jersey,
Oh, wow.
the 35th leading scoring NBA
Dude, that's
basketball
awesome,
player.
man.
So that's going to be for you, man. So
I did not even know this, man. Appreciate
it's authenticated
it,
and
brother.
certified.
Appreciate that. I'll put that on my wall, man. That's awesome, dude.
Yeah, for sure. So I hope you like the Spurs.
I love the Spurs, man. That's my team. That's my team.
All right, good deal. Excuse me. So today we brought you here because you're a mortgage loan officer over at USA Mortgages.
Yes, sir.
And we really want to talk to our veterans about how to get them in homes. A lot of veterans have questions. And so we brought you here to answer those questions today.
For sure.
So first things first, what is a VA loan?
A VA loan is a benefit that a veteran has earned the right to use. It specifically speaks to a veteran not having to put a down payment. That's what a lot of veterans resonate with. It just means it's unlike FHA and conventional whether you're a first-time home buyer or not, you have to bring a down payment. VA is very specific where you have zero down payment. There's more to that, but that kind of resonates with people in their mind. Every time I talk to a veteran, hey, I don't have a down payment, right? Now, as veterans, we should be educated on this when we exit the military. Unfortunately, they don't do the best job doing that. Me, myself, being a military veteran in the United States Navy, I wasn't told that. But when I knew I had the benefit and I was educated on it, I knew how to use it. And that's what's most important, is knowing how to use it. So I'd like to speak to that a little bit and what the benefits are.
Okay, yeah, sure. So what's the eligibility requirements for a VA loan, to be eligible for a VA loan?
So what's cool with the VA product is, specifically for me at USA Mortgage, we have many investors we work with, 30 plus investors. Most of those investors go to about a 580 credit score. If you don't have the credit score that you need, we will get you there. Don't be discouraged by not applying. Apply, we can do some credit repair. And when a loan officer does it, 9 times out of 10, it's free. Meaning we're not credit experts. We can't do miracles all the time, but we can get you in a position to try to buy and put you on that path to home ownership. But there are programs out there that have no FICO score limit. So you can actually qualify maybe with the 520, 530. I know that sounds crazy. That's not gonna be everyone's scenario, but at least give us a shot and take a look at it and know that there are investors out there to help.
Okay, and so I've heard that veterans can be approved with up to 60% debt to income ratio. Can you explain to us what the debt to income ratio is? What calculations are you looking for if you were looking over my mortgage loan application today? And how exactly does that work?
Yeah, so what the VA really focuses on is debt to income can go higher with VA. For example, FHA normally goes to 56.99%. Conventionals maxed out at 50%. The VA can go, I've even seen it almost up to 70 before, which is kind of crazy. 65-ish, we like to stay around that debt to income or lower. You want to have compensating factors, right? And what I mean by that is if you have poor credit, maybe you have money in the bank as reserves, money to fall back on in case you lost your job to pay your mortgage. If you didn't have that, maybe your debt to income's lower for the poor credit. You want to have some compensating factors to offset the bad credit or the whatever situation is going on there. What the VA really cares about is residual income. What that means is income you're going to have left over after you pay your bills. The debt you have on your credit report, the mortgage loan, and possible utilities, stuff like that. What money are you going to have left over? They don't want you strapped to where you're just house poor. The last thing the VA wants to do is help you get into the home and then you default on your mortgage. So it's all about risk layering, but they're the most lenient product on the market, best rates on the market. I would never, as a veteran, ever steer anyone to not use their VA benefits if they are a veteran to go with another loan program like conventional. That should never happen. So it's just an overall great loan. I've used it 3 times myself. I'll always use it, and that's another thing that I can speak to. You can use this thing more than once. This loan is not a 1 gig deal. You can use it once, and if you have a family growth or you have a family member moving in with you, you can keep that home as a primary, invest it, right? Like turn it as a rental, and then buy again. Or have multiple VA loans in different states. That could be a scenario for you. It's not loan specific like FHA where you can't have more than one. And if it makes sense to the VA, they'll lend you the money as long as you can afford it.
Right. And so to my understanding that the home has to be your primary residence, right?
Correct. As a purchase, yes, sir.
Okay. So if I purchase a home, it has to be a primary residence. I have to live there is there a time limit I have to live there before I can rent it out?
No, I mean, I've had people, join the military and then they get other orders, active orders to deploy or go to a different PCS to a different station and they have to rent that property out. So you can use that VA loan again, and you have to buy it. You're exactly correct in the form of a purchase. You can't use it as an investment. But when you're departing that, if you don't want to sell it and you can rent it, maybe you have a shipmate or another military member that wants to rent it from you because they have a family, they're going to be stationed there for 2 or 3 years. You can rent it to them if you're PCSing somewhere else and keep that home. You don't have to sell it. So that's a good way to build your net worth too.
Okay, so long as I have the intent to live in the home, the VA is cool with it. If I get cut orders to deploy to, let's say, Syria or most recently Israel, for example, I'm good.
Yes. So the intent, there is an intent in the disclosure package that a veteran will sign that's called the intent to live in the property within 60 days. So when you're signing at closing, they're going to say, I intend to occupy this property within 60 days. And your intent is to primarily occupy it as a homestead, as a primary residence. And that's your intent. Now, life goes on after that, and you can rent it after that. You can sell it, you can buy again, freeing up your entitlement so you can use that product more than once.
Okay, so I don't want to have grass in my backyard. I want to live in a condo. I want the amenities. I want, I don't want to deal with anything. Will my VA home loan allow me to purchase a condo?
It will. Condo, townhome, you can purchase that unit as long as it's VA insurable. And that's what's important to work with a great team, a loan officer like myself, but also an agent that's educated on the market. Condos are specific in that they need a certain amount of reserves for the whole unit because you're sharing walls with people. So you want that whole unit to be insured. If it's VA insurable, most times government loan insurable, we like to call it FHA or VA. Most times you can lend money for it. The VA won't insure.
Have you ever run into a situation to where a condo doesn't meet the VA's requirements, and what happens in that case?
I have, and it tends to be the homeowners association office that doesn't meet the requirements because it's all about liability when investors lend you money, and they want to make sure that their property is going to be okay if a unit burns down or if something happens to the other units. How do they protect their investment? So it really is most times on the HOA.
So I'm really big on helping veterans, increase their disability ratings. If my veteran's 100% disabled, they don't have any other income. Yes. Are they able to purchase a home using their disability compensation?
They are. Now their debt to income might be a little low, so their purchase price and maybe setting expectations with that buyer. And 9 times out of 10, when I talk to them, they're 100%. They know, right? Either the spouse is working full time, they're 100%, or maybe that's their only income. They know the budget they want to be at. Hey man, I can only afford $1,000 a month, or $1,200 or $1,500, or hey, I'm 100% disabled, but my wife works full time. We can 100% use that income. The residual income factor is that for that scenario, you're tax free.
Right.
So we're not taxing that income, or it's not, the government's not taxing it. So sometimes we can gross that up. So if you, for example, hypothetically speaking, saying you get $4,000, you're 100%. We can gross that up sometimes 125% because it's non-taxable. Okay. So that'll help you qualify for a little bit more.
Okay.
Yeah.
Okay. And so when I'm looking at applying for a loan, a lot of times there's, you got the new construction, they typically have their own lenders, and then you have USA Mortgage, for example, which would be an outside lender.
Right.
What are going to be the difference in the benefits between choosing between those two loan products, yourself and a builder?
So some builders are specific to where they won't give any incentives to outside lenders like myself. They kind of want to control the scenario, and the way they do that is working with the in-house lender. And there's caveats to that. There's pros, there's cons. So other lenders don't care. I mean, other builders don't care. They want their product sold. If inventory is sitting on the market, man, what do we got to do to help get that off the market? They will honor incentives with the in-house lender just like the outside lender. It helps to have contacts. If you've been in this industry long enough and you have contacts, you know that sales counselor. Sometimes they'll be like, oh man, I know Jacob at USA Mortgage, or I know so-and-so. I know they're going to get the job done. The last thing the builder wants to do is take the home off the market to a buyer that can't afford it and close on it. But if you have that backing, then sometimes they'll allow you to get those incentives. But if the builder's not offering incentives, there are programs that we can actually use to cover. And I'll give you a specific example. There's programs called THCA, Department of Texas Housing, T-SHAC. These programs are cool because a lot of, in a veteran's mind, they're like, I don't have to bring a down payment. Correct. But if you can get 2% covered by these programs and they offer them to vets, you can now cover your closing costs. So it gives you a stronger offer. You can actually go make a bid to not have to ask the seller to help cover your closing costs. A lot of veterans don't know that, and some lenders don't even educate on that. We like to just give all options, throw all options to the veteran. This is your best scenario. That home that just hit the market, guess what? You're not competing with other buyers because we're going to help you cover the closing costs. Now you can make a stronger offer to win that home that you like. Yeah.
Okay, so if I've foreclosed or if I've filed bankruptcy, can you still help me?
I can. Bankruptcy, foreclosure have waiting limits, time periods, depending on when it was charged off on the credit. Sometimes it's 2 years, sometimes it's 4 years. But yes, 1,000% you can still purchase.
Okay. Owner finance, how does that work? If a veteran was looking to owner finance, there's a lot of deals on the market. You can find them on Facebook Marketplace. What is owner financing? How does it work? And is it beneficial to a veteran?
I would say, in my professional opinion, no. Specifically because the VA won't lend money for owner finance. It's specifically buying it from that client. Sometimes there's a large down payment, 10, 15, 20%. They're going to set the interest rate as high as they want on you. Could be 8 to 12%. But the VA themselves will not lend money on owner finance.
Okay. Even if it meets the VA standard?
They won't. It's a non-traditional product, so it's not conforming to the government loan limits, to the government income limits, to the government guidelines. In that fact, they won't lend on it. Yeah.
Okay. And to my understanding, as a disabled veteran with service-connected disabilities that equal up to 100%, right? I don't have to pay a VA funding fee.
Correct.
What is that?
So a VA funding fee, and this is a great question that you ask because a lot of people ask, especially when they're applying, they'll see their loan app. We have a mortgage mobile app we use on our phone to like to share it to clients. They can apply there, upload documents. But a lot of them are like, hey, Jacob, I applied for a $400,000 home. Why does it say I'm financing $415,000? Well, that's the funding fee. The funding fee is the VA's way of insuring that property. It's only waived if you receive 10% or more disability. Okay. If you do receive 10% or more disability, you're not paying that. So if you're buying a $400,000 property, financing $400,000. If you're active duty, obviously you're not receiving disability benefits because you haven't been discharged yet. So in that circumstance, you're going to be paying a funding fee. If you own a home, like we spoke about earlier, and you're departing it and you're renting it but buying again, there's called a second subsequent use, where it's 3.30%. So you're financing a little bit more to use your entitlement again, unless you're disabled. If you're disabled, then it's completely waived. 10% or more, which is the minimum disability I think anyone can get approved for.
Correct.
Myself included, I was approved for tendinitis in the very beginning.
Correct.
And that means, boom, your VA funding fee is gone, which is great.
And it can save you a substantial amount of money, to my understanding.
Yes.
And so for PMI,
yes,
what is that? And to my understanding, the VA home loan program completely eliminates that.
Correct. So private mortgage insurance is usually on a different loan other than VA, FHA conventional. The reason that they have the VA funding fee it's kind of in place of that mortgage insurance, but it's completely gone with VA. So if you're 10% or more disabled, literally you're paying principal and interest, home taxes, homeowners insurance, maybe a homeowners association if there is one. That's it. No mortgage insurance at all. It's waived.
Okay. So I personally, I'm looking to sell my home. Is that, what if I want to buy another home? I haven't sold my home yet. Could you still get me approved? Could I still use my VA loan? Tell me what that process looks like.
Yes. So there is, what the crazy part about the VA now is if you can afford it, they'll lend you millions of dollars. If you can afford it. If you have entitlement wrapped up with one loan because you don't want to sell it, you want to rent it and eventually sell it down the road, and then you want to buy again, it's bonus entitlement. So we'll order your certificate of eligibility through the VA. It'll come back and say, hey, you have $200,000 wrapped up on your entitlement. There's a bonus entitlement calculator that we have. We'll compare that to the new price of the home. We'll put that in the calculation. It'll tell us if there's a required down payment. If you go over the county loan limit and you have bonus entitlement, most times you're paying 25% of that bonus entitlement. So if it's like $100,000 over the entitlement amount, you might be bringing a couple grand to closing, $15,000, $20,000. It just depends. I don't want to hypothetically speak, but
right.
According to that calculation, you'll be paying a bonus entitlement to get the second VA loan.
Okay,
Yeah.
And so I've received a ton of phone calls this week or this past week, and I'm not sure what's in the water, but I'm hearing a lot of veterans not being able to access their DD-214, or they lost their DD-214, which literally holds up the whole entire home buying process in order to qualify for a VA home loan. So as a veteran, when we're coming in to purchase a home or to apply for a mortgage with you, what are the documents that you're looking for? And what are the documents that you can live with and can't live without?
So that's a great question. A lot of veterans just don't know where to start. You know, DD-214 is huge. How do we know if you got it honorably or not honorably you were discharged? We don't know that until we get that. We can help you pull that VA DD-214. So we give guidance to that. Someone like yourself as well is a great tool for us. But I've actually, and I'll give you an example. I have a veteran closing tomorrow, 100% disabled. He actually receives Social Security too. He was in the war, and he's just no social environment. He gets anxious. I had him come in with his power of attorney, and she works with the VA too. And he didn't know how to do anything. I said, look, just come into my office, brother. I'll take care of it with you. You're going to spend about 2 hours, but we're going to walk you through everything. So he had already applied, but he didn't know what ID was hard for him to get. He couldn't go on base because he had social anxiety. I had to pull the DD-214 we were able to order for him, tax transcripts, his VA disability award letter. He didn't have that. We had to go on va.gov to help him pull it.
Right.
Social Security Administration, we had to pull that. So we were able to walk him through getting to a point where the loan is going to be 75% done, pending the appraisal and everything. And then if he had to come back into the office, it was going to be one last time before he went to closing, which happens to be tomorrow. And this is a gentleman that just won't step into the public eye because he gets nervous. He doesn't drive a car. He has someone help pay his bills through the military. So we do all that. You know, I'm very personal on everyone I help, but especially veterans. I just have that little bond with them. I'm like, I got you, you know, because I bought before. Fortunately, the person that was helping me when I first purchased wasn't the best. Mm-hmm. And I vowed when I became a loan officer to just give them my customer service, you know, indefinitely. Just as much as I can help you, I'm here day and night.
So you're just full service.
Everything, man. Just how I'd want to be treated.
Right,
you know?
Right. Good deal. So, little story about myself. So I moved to San Antonio in 2014 when I got out the military. When I first got rated, it took about 6 or 7 months. I was like 60%. It actually took me 5 years to get to, I didn't get to 100% until 2019. And that's obviously when I started doing VA disability ratings full scale once I learned it. So Man, I think this is so important for our viewers because I was paying $1,175 a month for an apartment back in 2014, which was more than enough money for me to purchase my first home back then, especially.
Right.
And I just really want to help them not make the same mistake I did, and to really just jump in and start creating that generational wealth, as soon as possible, right? So if perfect scenario. Let's say I have an apartment. I want to get out of my apartment. I want to break my lease. I want to purchase a home. I don't want it to get on my credit. Does your company help with that?
So, no, but yes, and I'll tell you how. That's a little trick question, but in answer on my end. So we do partner with some agents that are able to buy out the contract for the leasee that wants to buy. 9 times out of 10, if you pay that apartment complex or the person you're leasing the house from 2 months, they'll let you out. They want to find a new renter. In that time, we're helping you get pre-qualified. We're letting you know your buying power. You don't ever want to guess. It's like going to the mall without money or going to a car lot without financing. You want to be able to know what you can buy. So I would strongly encourage you to let you apply first. Let's see where your credit is. The common question is, well, you're going to run my credit. We are going to run your credit, but it lasts good. It's usually good for 120 days, which is 4 months. In that time frame, we're going to know what your scenario looks like. We're going to get your docs in. An agent can help buy out that lease from you. If it takes some of the money that you have saved, we're going to help you on this end try to cover the closing costs with the program. You can also get 1% earnest money from a gift, from a family member, from a brother, sister, mother, father. Maybe you got income tax coming in. There's numerous loan scenarios that we can create just by you coming to talk to us and applying. But we can definitely help you in that. There's so many people that are renting right now that are, let's just give it to your example. Let's call it an even number at $1,000 a month. That's $12,000 a year we're throwing away, right? We're not investing in our future. We're not building equity. You're not getting that money back. You're going to renew a lease because you're uncomfortable to answer these questions and go through a mortgage process now, but you're going to throw away $12,000 more for a year. It doesn't make sense. Let's put you in the path of homeownership. Even if your credit's not there and you're 6 months away, we know you're going to buy in 6 months. We got that path for you. Stay on the path. Don't open up new debt. Build your credit, and let's get you investing in your future.
Great, excellent. Thank you so much, Jacob. Everybody, you heard it, Mr. Jacob Salazar, USA Mortgages. Jacob, how can the veterans get in touch with you?
My direct cell phone, I'm attached to it, 210-383-6197. If you don't get an answer, I'll text you back right away. Again, customer service is my biggest thing. I'm working Sunday. You can call me today. Weekends, nights, it doesn't matter. I'm available. J Salazar, it's JSALAZAR at usamortgage.com is my direct email address. By the way, my spouse is a loan officer as well. She speaks Spanish. So we're a husband and wife team, the Salazar team. You can look us up on Facebook. Instagram, it's, we're on there as well, Salazar Soundbites. So we look forward to hearing from you. And just reach out with any question you have. Don't feel embarrassed about asking those questions. We're here to help, and we want to help.
Thank you, Jacob. I appreciate you once again. Thank you for
coming.
Appreciate it again. Yeah, for sure, man. Yeah, for sure. Hey, everybody. Thank you again for tuning into the A1BA Rating Show. I'm going to have Jacob's information down in the link below. If you have any questions, shoot us a DM, send us a text, and we'll be happy to help.
Are you tired of getting denied for the increase in your disability rating that you deserve? Contact A1 VA Ratings, 210-668-6065. Serious about veterans, serious about results.